Welcome, everybody. I want to encourage you while I'm doing this intro to go ahead and introduce yourselves in the chat function to each other. And I want to encourage you all to, as we go along, answer each other's questions, pose and answer questions from each other, because that is what this platform is for. My name is Ruth McCambridge, and I'm the Director of Content at the Nonprofit Financial Commons. And I'm bringing you today this. It's a kind of a surprise late summer webinar. We usually don't do events in the late summertime, but we decided to do a couple this year, and we're very surprised to see how many people actually signed up for these topics, which I think really require us to have a little quiet time to consider them if you're having any quiet time. We're talking today about the kind of shifting landscape around nonprofit audits. And I don't think we realized till we went out to ask you what your questions were, how much of a pain point the audit process is right now for nonprofits. It's pretty intense, and we'll be discussing more of that as we go along. Before I do anything else, I do want to say that today's session is being brought to you by Jatasa, which is a bookkeeping, accounting, and functional CFO service provider that works exclusively with nonprofits. Their team serves over 1,500 organizations across the country and has helped nonprofits organize their finances since 2008. I want to say, I'm not going to read the rest of their blurb, except what I want to say is that people need to think about the use of these kinds of external supports for your financial systems, because as you will hear in this webinar, preparedness for audits actually means a great deal about whether you can even access them and the price at which you can access them. So I want to remind you of a couple of things about this platform. This is a place where everybody is a teacher and a learner. Feel free to pose your questions in the chat at any point during this presentation. We will gather them and we'll ask a few of them at the end. But beyond that, you can answer each other's questions too. If you feel like you have a reasonable answer, go ahead and do that. This particular topic is one where when we went out to find out what it was that you wanted to know, we actually learned a lot about the intensity of the issues that surround audits right now. I want to say that what that brought up for us is that we can't answer all of your questions right now because they aren't to be answered. We need to figure out what parts of the problem we can address through policy, what parts need to be addressed through practice, and what parts need to be addressed through the support system that's around nonprofits. We realize that that's a little frustrating for some organizations who have immediate audit responsibilities and legal requirements. But we're going to talk about that during this section. So I want to present now our presenters, who include Melody Bunting, who's a senior manager of advisory services at Wagner CPA, very skilled in everything nonprofit accounting. So please feel free to ask her the most technical to the most broad questions about audit and its relationship to good accounting practices. Wade Rogers, who you'll recognize as one of our moderators, is also doing some presenting about one particular problem today, but will handle the question period. And Dana Brito, who will be interviewing our case study today, who she'll introduce in a minute. We want to thank all of the presenters, as always, for for being here and for working so hard on this presentation. That really was a little piece of investigative work that we had to do with all of your help. The number of stories that we got from you, the number of questions that we got from you about audits was incredibly instructive, and it really did guide us to where we wanted to go. With that, I'm going to hand it over to Wade, who's going to talk to you for a minute about why this sudden change in the availability and the prices of audits.
Thank you, Ruth. So before we get started with the main topics of this webinar, we wanted to highlight to you an issue that will pervade this webinar in addition to future topics that we cover. So it's not just something that impacts audits and the firms that we engage to perform them, but also our ability to staff the finance roles within our organizations, or to find outside services such as bookkeeping and accounting services. You may already be feeling the pain in this area. And what I'm referring to is this crisis in the accounting profession surrounding the pipeline of entrants into the profession. In fact, it's become such an acute problem. There's been a national task force formed called the National Pipeline Advisory Group. And very coincidentally, just this month, they issued their final report, which is 95 pages of a lot of really good information, which will be included in your resources for this webinar. What you're looking at right now on the screen is a graph that actually comes out of that report from the Pipeline Advisory Group. And it shows what's happening in numbers, what's really starting in the pipeline. We can see between 2017 and 2022, the number of accounting degree completions dropped by 18% at the bachelor's level and 28% at the master's level. So fewer students are majoring in accounting, and the ones that are majoring in accounting are not necessarily going into public accounting and thus into auditing jobs. So the work and the profession, for a variety of reasons, are just not attractive to Gen Z, to overgeneralize. And it's not just who's coming into the profession. A Wall Street Journal article in 2022 reported that between 2020 and 2022, that's a lot of numbers I'm saying, more than 300,000 accountants left their job, a 17% decline. Anecdotally, this morning, I got a phone call from a senior manager in the audit firm I'm working with this month. She's leaving. Tomorrow's her last day. She's going to work at a local nonprofit, and she's a very experienced senior manager. So many factors involved with these trends. Great detail in that advisory group report that we'll include in your materials. Dana, could you go to the next slide? So what does this mean to us in the context of this webinar and getting our audits completed? The first one, longer wait times. With less capacity, firms are drawing out the timing of their audits. So we might have been used to, for our June 30th year end, getting the audit started in August. We may not see the firm getting started until November or December, and then extending the 990, waiting for the audit. So we're definitely seeing these drawn out audit periods. Fewer choices in who we can engage. Gone are the days where we may be able to get multiple proposals from firms, and actually Carrie's story in a few minutes is going to illustrate that. Firms in the past may have done nonprofit work to fill in the slow months of the year, but they no longer have that capacity and availability of staff. And some firms are exiting this work altogether. They don't consider nonprofit work to necessarily have the bottom line they need to sustain themselves. And nonprofit work can be low margin for firms because they often require more work than really what the fees are bringing in. And then finally, speaking about fees, higher fees. So to attract and retain this staff that is getting more and more difficult to find, firms are having to increase salaries, go figure, which obviously is being passed on to their clients. And additionally, on the fee level, we may now be seeing less of that, I say in air quotes, nonprofit discount that often was accorded in the past because firms had the capacity to be able to do this work during slow periods. So all of this is going to compound the issues that we have in terms of getting audits completed. And I think that it's going to kind of weave its way through the rest of this discussion. But just wanted to tee that up for the rest of our time. And I think I'm passing it on now to Dana and Carrie.
Thanks so much, Wade, and really appreciate the contextual landscape and background there. So again, my name is Dana Brito. I am a moderator here at NFC and also a financial management consultant for nonprofits across the country. As with most of our webinars, we try to illuminate our content with real life stories in the trenches. And so I have the pleasure and honor of introducing Carrie Bowden, who's the Finance and Operations Director at the Oregon Natural Desert Association. And she's going to share a little bit more about the organization itself and her experiences with audits, the limitations, the struggles, and also really how to communicate around this problem, particularly in the current landscape that we just talked about, and the struggles around maintaining and securing those services at a manageable fee. So Carrie, great to have you on board. Really great to meet you and have you here today. Before we jump into your story, would love to hear a little bit more about ONDA. Can you describe the organization, your mission, and share a little bit more about your budget and your funding model?
Sure, sure. Thank you. Happy to be here. Hello, everyone. So ONDA is a nonprofit in the conservation industry, and our mission is to protect, defend, and restore Oregon's high desert, all landscapes and wildlife. We're an advocacy group, and we also work with key community partners and volunteers to complete local ecological restoration projects to improve wildlife habitat. So that is our mission, and we have our budget for 2024 is 2.1 million.
So we understand that you entered into your work at ONDA at a time of some significant transition. Can you tell us a little bit about the background behind that? What was going on as you came on in your position?
Sure, sure. When I came on, I was replacing our former finance director who retired after 17 years. And amidst that time, we were starting a new accounting system, completely overhauling our accounting platform. For the first time since inception, we were doing payroll in-house. Also our CPA passed away unexpectedly during COVID. So we were trying to get an audit. We were overdue for an audit, and we were still going through the transition of a new CPA firm kind of wrapping their arms around everything. So there was a lot going on, and our intention was to have an audit for tax year 2023, kind of once the dust settled with the new accounting system, and then I was on board. So those were kind of all the trigger points. And we hadn't had an audit since tax year 2020. So in our mind, we were overdue. We had always gotten an audit every year with our previous CPA.
So given that, again, the last audit sounds like, again, was 2020, can you talk a little bit more about what the search entailed for an auditor, ultimately what you found and where you finally ended up?
Sure. So we went through the RFP process this spring, and we had a very targeted list of CPA firms. We did a lot of research, not only with fellow nonprofits, also consultants, and we had personal recommendations from our board of directors at the executive level, and personal introductions to get in with some CPA firms. So this was a very curated cold list. It wasn't like a shotgun, like, let's see what sticks. Like, it was very intentional. We even had a CPA that we had worked with in the past, a couple of them on our list. So it was regional, it was local, it was national. So we sent out 7 RFPs, and 3, we got no response. 3 declined due to capacity. And the one bid we got back was our current CPA, who is only offering reviews. So we found out at the end of last year that they no longer had the capacity to provide an audit. So this is what also helped, kind of trigger us doing a deep dive on trying to get an audit aside from the organizational changes that were happening. Our CPA is like, yeah, we can't do this anymore. So that's the bid we got back, and we will continue to get a review, but also with some targeted a targeted look at some of our internal controls, kind of an a la carte audit, if you will, or mini audits on a list of items that the board would like us to take a look at, just to give our funders and our grantors some peace of mind that we're going through the extra due diligence, sans the ability to get an audit.
So it sounds like, again, you, sans an audit, you've moved forward with a review and a targeted look at internal controls. Would love to hear a little bit more about how that's gone and some of the benefits of that, and if there's anything else that you would have wanted to add or would like to add to that mix going forward, given some of the challenges that you've experienced and some of the landscape challenges that we've already talked about.
Sure. So we are happy to continue with our CPAs. We feel very lucky. You know, this year our 990 was, you know, done in May. So that has not happened for some time. So we're happy to continue the relationship. As far as what the board wants to be specifically looking at, we are in the process of developing that now. We actually have a board meeting next week where they're going to start to call out what they would like to see. And there's a lot of items that we are kind of already doing. My background is in finance in the private sector, and I did a number of audits. I was on both sides of audits. So there's some things that I've already brought here from my prior world. So we have been really trying to plug the holes we know exist and then kind of disclose those that we know, you know, due to capacity and other things, like this isn't going to happen. Like, are you okay with it, or what would you like to do about it? So that's, we're still in the process, and we expect to have things kind of looked at towards the end of the year and in the spring for 2024 tax year.
Very understandable. And so I guess my last question is around the fact that I think there's a lot of organizations who, again, their state requirements are a big driver of moving forward with audits, but I also funder compliance and sometimes funder expectations are a big driver of moving forward with an audit. And given that you've taken this alternate route, would love to hear, as we conclude, what have been funders' reactions and how have you addressed this situation with funders?
Sure. So we have packaged up an explanation that we have given to our dev team to, you know, field these types of questions. So, you know, this year alone, we've had 2 inquiries, one from a major donor and one from a foundation that has been our biggest donor. And we explained kind of the current landscape and where we're at, and especially now coming full circle with the RFP process, basically empty-handed, sort of, as far as an audit goes, and the due diligence that we have performed. And so far, we have not had pushback. It's been an education and explaining people the difference between audit, compilation, review, what it does and doesn't do, those types of things. I think that the audit has just kind of been almost taken for granted that, yeah, of course, everyone gets an audit, but we don't have any funders that are like, have it as a hard requirement for us. We had one that were like, kind of, it would be nice, you know, like they would prefer it, but once we went through cost in the current landscape, like they understood, but we also wouldn't be shy about asking for a grant to fund an audit if someone really wants one.
Okay, thank you so much for sharing your story. Really appreciate, I think, the nimbleness. And again, so a lot of that was due to the internal and external circumstances facing the organization, but I also really appreciate what you got out of it, what you still are aiming for, and then also the education element with funders, which we'll talk a lot about in a bit. But more than anything, really thank you for sharing your story on navigating a very tricky situation tied to transitions and external and internal compliance requirements, and thank you for giving folks something else to, or alternatives for how you might approach this situation given the challenges in the current landscape.
Thank you.
So with that, I have the pleasure of handing it off to Melody Bunting, who's a senior manager at Wegner CPAs, and Melody's going to walk us through an audit, what it is, what it includes, and then also some potential alternatives, some of which we've talked about and heard in Carrie's story as well. So Melody, take it away.
Thank you. It is a real pleasure to be here. And I appreciate the complexities that everyone is experiencing at this point, because it's a real thing. Now, part of what I'm going to talk about is the limitations of an audit. And this is not something that was constrained by the current pipeline issues and capacity. There's always been a misunderstanding, if you will, around an audit. What exactly is an audit? And that's a really good question, but it depends on who you ask. So public expectation generally of an audit is that it's more what they wish the auditor would do, and they hope that it will uncover any financial irregularities or instances of fraud. And they see it more as, I've often heard the term guarantee used in conjunction with the word audit. It definitely is not any of those things. And that's one of the problems with an audit. The idea was to have that transparency and accountability to funders as well as to states with solicitation requirements, etc. But there's other ways to meet those requirements. So let's dive deeper into a little bit more about an audit specifically. The 3 slides that I have in here are material directly from the AICPA on what they define as an audit, a review, and advisory services. So an auditor is basically defining an audit differently than that public expectation. And their idea is that we want to meet professional standards and minimize our legal risk while providing financial statements that have value and are important to the context of funders and states and the nonprofits themselves in seeking that funding and being accountable. Now, the problem is that they're prepared according to GAAP, which is a fine standard, but it's designed for external users, for one, and that's why an audit can be done. That does not necessarily translate into something meaningful for the organization itself, because what we may want from a management and decision-making and even a board level can be very different than what's presented in an audit, because the audit is according to those generally accepted accounting principles. So the auditors have to follow the standards that are called GAS, generally accepted auditing standards. And what do they require? Well, the standards don't require a guarantee of any kind. Some of the things that are in the standards are that we use sampling. We don't look at everything. Even if we could, there still wouldn't be exactness to an audit. There's judgment, just in accounting in itself. Other than the bank balance that's in your bank account, most items in accounting have some degree of professional judgment or subjectivity to them. We often joke in our office that when you ask an auditor a question, the answer you'll get is, it depends, because it's very much based on facts and circumstances and the particular circumstances around that question. It's also very contingent on the language. If you have an audit and you look at the auditor's report, I'm going to take a minute here to talk through some of that limitation. So the auditor report starts off by saying, first of all, it's an opinion. It is not an absolute. It's an opinion, a professional opinion. And then it goes on to say that it presents fairly in all material respects. 2 key words there. Fairly, what does that mean? In other words, does it mislead you? That's the intent. So it's from a high level, does it mislead, but it's not precision again. And material. And material depends on the size of the organization. And sometimes what's material to an auditor may seem astronomical to an actual financial statement user. So again, there's relativity here. So materially, in all respects, it's presented. It includes then in the second paragraph after the opinion, that it's based on the auditor, a responsibility of management. So specifically in that audit report, it highlights how responsible management is, that the auditor's coming in and giving an opinion on fairness, but it's not the responsibility of the auditor to put together those financial statements. That's the responsibility of management. And management is supposed to be doing that according to a fair presentation and GAAP requirements. Now, not all nonprofits have the capacity, even internally. Some of them have outsourced or used other resources, but that's not always a given either. And we'll talk about what that equates to here in a minute. But you have to have that ability within the organization to do that fair presentation according to GAAP. The other responsibility of management is and maintaining internal control. This little phrase, but there's really a lot of complexity to that. And internal control is the key area where we can identify if there's more of a likelihood of misstatements or fraud. And so looking at that internal control is one of the key aspects of the audit, but it doesn't necessarily go into enough transactions to tell you everything. Remember, we do a sampling with an audit, not everything. So management has a responsibility, but then the auditor also has a responsibility. And that's to obtain reasonable assurance. Notice again the language, reasonable assurance, not absolute, okay? It is not a guarantee by any stretch of the imagination. And again, the language material comes back in, that there were no material misstatements. And it even says right in the language that it's not a guarantee to detect material misstatements, because it's not. We're not sampling everything. There are so many elements that go into the financials that the auditor, even doing an exceptional job, is not going to detect everything that might be in those financials. And there is a higher risk of not detecting material misstatements due to fraud based on controls. So that control piece is really the key element in an audit. Now, despite everything the audit profession has tried to do on closing this gap, there's still a really big gap. And what users of the statements expect versus what the auditor provides may not always be in line. And that's why we're going to talk today too about ways to meet that accountability piece that the funders want to know about without necessarily having to have an audit. Now, one of the other key problems with an audit besides the capacity issue is that management has to have what we as auditors call SKE, S-K-E. It stands for skills, knowledge, and expertise. So for you as management to be able to comply with the paragraph in the audit report on the responsibilities of management, there has to be somebody who can be designated and documented as having that skill, knowledge, and expertise. And oftentimes nonprofits, again, based on limited resources and staffing and so forth, don't have the full depth of SKE. You may have some very competent bookkeepers and some auditors, or I'm sorry, accountants within the nonprofit, but that doesn't necessarily mean they really still have the full SKE of understanding what that material misstatement is or what those risks are or the internal control. I've been around a long time, and trust me, I'm still learning constantly. So it's not an easy process. Now, an auditor can actually perform some non-attest services too as part of the audit. Our firm works with a lot of nonprofits that are smaller, and we provide non-attest services. In other words, they're not part of the audit for things like their leases, because it's more cost effective for us to have the software, or tracking their property and equipment, same rationale. It's more cost effective using our software. Another big one is preparing the financial statements, because we have the systems, again, and the technology to put it together easier than the client often does. So we have to be careful then as auditors, if we're doing those non-attest services, we got to make it extra clear that is an independence potential issue. And the person with ski, again, is accepting responsibility for all those non-attest services. So there's a lot here for the auditee or the nonprofit to understand. Now, just so you understand though, too, ski does not mean that you have to have a CPA. It just means exactly what it says. You have to have the skills, knowledge, and expertise. And I'll give you an example. I have one client who's accountant. She wouldn't call herself an accountant because she's not trained in accounting. And she gets really nervous when anything new happens, but she knows how to ask the right questions. She knows the things that would trigger additional information potentially. So she has that knowledge and the skills to reach out. And sometimes it requires an expert on the outside. But in my mind, she's got that ski because she understands the big picture. Now, on the flip side, I've worked with nonprofits that actually have CPAs as their primary person, and that CPA does not have the ski because they don't understand the nuances and the critical pieces of nonprofit accounting in particular. One example I have there is a client who's a CPA, but didn't understand some of the things unique to nonprofits, like promises to give, or restrictions, or endowments, etc. So that's where it gets really tricky because it's not absolute in any one bucket. There's a lot of things to consider. So then what is the value? If there's so many things here that aren't absolute, what's the value? Well, it gives you a GAAP prepared financial statement, and that means that external users can expect the same accounting rules to be done. It gives external users some accountability and comfort level, knowing that they're comparable and have applied the same basic accounting principles under GAAP. It's generally required by funding sources, especially banks and some of those, as well as states. Not all states have education requirements, but a number do, and a number of them require an audit. It's intended for that accountability piece to protect the public and donors. But unfortunately, it doesn't prevent people from taking advantage of their nonprofit status or still having misstatements in their statements and so forth. The other big piece is communication with governance. And if you look and roll back the audit a little bit, governance is really a key factor in an effective audit. And an audit is not effective if governance isn't doing their job. So now we were asked earlier about a review. What's a review? This also is directly from the AICPA. And it's basically a GAAP statement as well. So it's prepared according to those generally accepted accounting principles. But we don't do in a review, we don't do any sampling. We don't look at actual source documents. It's more of an analytical type procedure where we look to see if things appear reasonable and we ask questions, and based on what's going on in the industry or for that particular area, then we kind of make some assumptions and analytical questions as to, does this appear reasonable? So it's more based on auditor judgment extensively and that analytical ability to make sure that the statements are free of material misstatement. Now notice again, it's material, it's not absolute. And the report here states that we're not aware of any material modifications that need to be made. It doesn't talk anything about an opinion or fairness. It just says, hey, we didn't become aware, we didn't trip across any material modifications. So not necessarily the strongest confidence and accountability boost, but that's what a review offers. A review also does not do any compilation work, or I'm sorry, internal control work. So that's the other misnomer here, is it will give you a statement, and a statement that looks similar to an audit, except for the letter and the degree of assurance provided with it. But it doesn't, for the auditor part or the reviewer CPA part, include taking a dive into the internal controls or expressing an opinion on the internal controls. So what do you do then, right? Well, when I talked to different people about this, I had one example of a client who came to me and said, hey, a donor requested that we get an audit. And I said, ask some more questions first off. Who's the donor? What is it they're trying to get at? Now, one of the things that I have seen repeatedly when that question comes to me is that it's more of a historic and staying with the norm when a donor sometimes asks for that audit. As in Carrie's point and when she talked about her experience, some donors are willing to work with other things. They just don't know what that other thing is, and they still want that accountability. So what donors are looking for is especially that accountability. And there's some models of donor development and funding that are moving towards that more from the donor's perspective to say, okay, how can we get accountability and understanding when we don't necessarily have to have an audit of the financial statement numbers? Now, one of the examples of this was a local client who had one state-funded grant. And normally when you have federal or state money, there may be an audit requirement attached to it. And those are the harder ones to overcome or have a conversation about because you're dealing with the government. Well, in this case, the organization was very well known in the community. They were able to have the conversation. And they said, you know what, it's one funding. It is something that was unique, kind of related to COVID. We're not going to require you to have an audit, but we want something. We want something to explain, you know, what your systems look like and how you're factoring in that accountability piece and being financially responsible. So in their case, we did advisory services. Now, this definition is also from the AICPA. And notice that first bullet point, really important. They develop findings, conclusions, and recommendations, not just a financial statement. And that's a key difference here. And it can include a variety of customized different kinds of reviews and studies, etc. So in this particular example, what I'm talking about, the other donors as well as the state said, okay, you know, we'll take some other type of accountability piece. So we provided advisory services that resulted in a 20-page report. That 20-page report included observations, expectations, examples, specifics of what they were doing, specific recommendations for best practices, etc. And I'm going to go through the sections of that report to give you an idea of some of the things that we look at. So in that particular, and FYI, not all reports are structured exactly the same way. Okay, here's the other difference. These are really truly customized to the needs of the organization. In this case, we started with an internal control introduction because it was relatively new. Not all of the board members understood what internal control meant. And so we went through a basic primer on that first. Then we talked about how internal control is relevant to fraud and abuse. What's the connection there and how does that work? Then we went into a whole section on governance and we talked about what governance was doing well, what they needed to look at in some areas where they were not even really doing the full extent of their fiduciary duties. And that's a huge thing we don't always get to do in an audit. Then we talked about the budget. We looked at the budget and what things were they doing well there and what things weren't they doing well there. And did the budget include things for reserves or making up deficits? Some of the things that are not necessarily as obvious when you're constructing a budget. We talked about financial reporting and not just basic GAAP financial statements, but actual decision-making kind of statements. One of my favorite things to talk about, especially to accountants, is to say, okay, why are you taking something that you have developed in a foreign language, accounting is a foreign language, and giving it out in the foreign language, expecting your users to fully understand it. So in advisory, again, we can take that financial reporting and put it into language that doesn't have the limitations of accounting and talks more in real terms that are easy to understand. So we talked about what would help them make decisions. We talked about their revenue mix. What are the pros and cons of different kinds of revenue? What are the reporting requirements for different kinds of revenue? What revenue might be subject to unrelated business income tax? We could do all of that as part of this revenue assessment. Then we looked at operational procedures, and we dove deeper than the sample that we might do on an audit and actually looked at more policies and procedures and documentation and exact things around it. And then we made recommendations for ways to improve those things. And oftentimes in smaller nonprofits, that involves having a third party that can do an independent review. So included in the 20 pages were a number of resource tools for this organization. What I ultimately heard back from the organization is, she told me, the board loved it. They learned so much. It really helped. And the donors were thrilled. They said this was way more informative than an audit ever could be. So why do we do an audit? What's the first piece in the question there? Well, oftentimes it comes from a government or a bank or a funder that's all they know. They know to ask for a gap statement because they know that's been the norm. They know an audit does include some review work around internal control. But guess what? What from an audit would actually inform you if there was potential of misstatement or fraud? It's not something that the client, the organization, nonprofit has to give to the public. Within, again, that audit package, there's a communication that is expected to governance about if there was any discrepancies during the audit, if there were any arguments, if there were major estimates, etc. There's a number of things that the auditor has to tell governance about. But there's a separate letter to governance if the auditor determines that there is material or significant deficiencies in internal control. There's your letter. I can almost guarantee you letters to organizations that have material deficiencies probably have some misstatements, if not fraud. But that letter doesn't get passed along to the public unless somebody knows to ask for it. So there's another piece that's missing in the general scheme of how we're doing things. And even then, even with those letters to governance, they all still say management's still responsible. Okay, here's what we think, here's what we're telling you, but management's still responsible. So that's one of the key things that is not necessarily linked well in an audit. Now, what are your alternatives? Well, you could do a review or a compilation, but you're basically going to get a gap financial statement. You're not going to get any internal control work or any other suggestions. You could do a customized advisory report like the example, or you could do some specific board work. I'm finding more and more that there's a lot of value in getting the board fully engaged and understanding their governance duties. And oftentimes that can be critical in the donor and the nonprofit communication, is to have governance involved in that communication. Well, in the meantime, if you still have to get an audit, how can you be prepared? When we were talking about getting ready for this, Ruth asked me about our firm and audits, and we won't take on a client anymore unless they're fully prepared and meet certain criteria that we can work with, and we know we can do a good job through an audit. And some of that preparedness is the things that you see here. Our A clients, as we call them, communicate throughout the year. They don't wait for us to discover something at the end of the year. They tell us things throughout the year. They look at that engagement letter and they understand their responsibilities, and they understand the timing, and that we are not just available for them. We have a very tight schedule. So if they're not planned and prepared when we've set field work and set aside our time, it's going to really be a challenge to get it done. And it may fall to, a much lower priority and not get done in a timely manner. And then they also have to really understand what those governance duties are. And there's even a planning letter with governance at that point, because it's so important for governance to be on the right page. So if you have a chance of getting an audit, you got to be prepared. And I'm going to turn it back over to Dana.
Thank you, Melody. So before we hand it over for questions, really just want to lift up a few themes that I think were really important based on what Melody presented and also the story that we heard from Carrie. So we totally understand that, particularly in the cases where you have state regulations and requirements around audits based on your budget threshold and particular funding sources, especially government funding, there may not be as much flexibility as you would like about an audit. And I think we're still understanding from a legal perspective, what are the complications and the consequences of the current landscape, particularly from a market dynamics perspective. But particularly if you are an organization that it doesn't necessarily have the same audit thresholds as others across states, and also if you don't have funders who are requiring audits, really take a step back and ask, why am I moving forward with this, and what are we trying to get out of this? Because again, I think many people enter into audits thinking that if I get this, then this is my proof to everyone that there's no evidence of fraud or misuse. And as Melody just stated, an audit does not, or having even a clean audit does not necessarily dictate or state or mean that you have no misuse or even no fraud happening. We had a whole webinar on internal controls last month, which is on our website, and talked a lot about, case studies of massive egregious fraud. And for years, those same organizations had clean audits. So if that's the reason why the board and where funders are moving forward with it, question it and talk about it and take this as an opportunity for education. And similarly, again, Carrie's story was a great example of this, where circumstances internally, externally made it extremely difficult, if not impossible, to move forward with a traditional audit. So really taking advantage of some of the type of consulting and advisory work that Melody mentioned. So really taking a look at internal controls, appropriate workflows, democratizing financial information. So I mean, we understand why GAAP and GAAP requirements exist, but for everyone else, especially for those who aren't finance people, how are you organizing financial data in a way that is understandable and that allows for you to democratize the information to make sure that people are as informed and engaged as possible? And I think as it relates to an audit itself, again, for those of you who have to move forward with it and where there are very strict compliance, either at the state level or based on funding sources, really rethinking how you frame it and how you look at it. Like we've seen a lot of comments in the chat about really looking at audits not as a policing exercise, but really as an opportunity to take a hard look at how your business model and also how things are working or how things aren't. So again, a big piece of the audit is your financial statements, and especially if you're looking at that on a trend, or at least most audits include year-to-year comparison. Look at your revenue trends, look at your expense trends, look at your profitability, and see what the risks are and what the story is so that you can plan accordingly. And then also, especially if you have a really good CPA, use that as an opportunity to understand, like, what are we doing well and what requires work. So if you have specific journal entries, or if you weren't recording accruals correctly, take that opportunity. And again, ideally having a CPA that's willing to do this, to talk through how you could be doing things better and what types of processes and workflows and best practices would be necessary, so that if you do have any deficiencies or findings, that you're preventing those from happening in the future. And then also ultimately making whatever changes that you need to make sure that your financial practices are running as effectively and efficiently as possible. So with that, I would like to hand it over to Wade and make sure we have at least a little bit of time to answer some questions and see what people are thinking and feeling on the webinar today.
Thank you, Dana. I think we're going to have everyone come back into the room at this point. There's a really great conversation going on in the chat, in case you're not seeing it. And this question actually came up several times, even in the registration questions. And it's with respect to internal controls and the system of internal controls that organizations may have. And the concern is, are we starting too soon with an audit? Do we not have the internal controls in place that are necessary? Is this going to trigger a management letter? And there's been a good back and forth about the management letter versus sort of the material findings. And I think I wanted to address that question in the sense of how an audit is actually opining on the financial statements in accordance with GAAP, that the internal control is part of the process. And so, Melody, I wonder if you could sort of speak to that there's no one threshold to reach in your system of internal controls to be audit ready, but rather what is it that's going to trigger the financial statements to possibly have not represent fairly in all material respects, if I can remember my auditing class. But that is a big concern folks have.
Internal controls can be complex. I mean, they can also be fairly simple, but they can be complex. And they're going to be depending on the types of transactions and the organizational size as well. So sometimes this is where it's a good place to start. And it could be a board member, it could be other people. It doesn't have to be an external CPA. But to go through all your processes and write out the process and think like somebody who could skip a step and where could a mistake happen? And it's not one size fits all. That's what makes internal controls complex.
Yeah, I think it is that that difference between what is it that's really going to impact the financial statements versus what is a good system that you would have in place simply for operational efficiencies, which we talked about a couple webinars ago, if not the last one. Sort of unrelated, this question has come up several times as well, is best practices in the past when we didn't have a pipeline issue was auditor rotation, that every certain number of years, maybe 5 or 7 years, you would rotate firms so that you'd have this fresh set of eyes. Where do we stand on that now with respect to, especially if we're in a smaller market, we're nonprofits, it's harder to maybe find firms to rotate to.
I can speak from our firm. We, even prior to this pipeline issue, had a lot of clients who didn't rotate. And yes, that's accepted practice. And it's good to go out and put it out for proposal once in a while and make sure you're still in the right marketplace and in the right space. But what we found is if you take other controls into account for both the client and the audit firm, in a lot of ways, you're going to get a better product by staying with the auditor because they understand the nuances of that nonprofit. And in our firm, what we do is we rotate partners instead of rotate firms for the client. And we also rotate in independence kind of reviews and other factors to make sure that we're still maintaining that integrity, but without having to switch firms.
Yeah, thank you. And that's often the reply with firms when you say, hey, it's time to rotate. And they say, no, keep us. We're happy. We'll change partners and look, it'll be that much less painful. There were a couple questions as well, prior and during, also just from the governance standpoint, the relationship between the auditors and the board and possibly a finance committee. And Carrie, that may also would be great because you're right there on the front lines with your story in terms of maybe how your audit firm is interacting with the board rather than with you, and getting through the audit, but how that's being communicated. Maybe, the auditor selection, those types of processes. Folks bring up the idea of having a separate audit committee, in fact, which some organizations do.
Sure. So our CPA sat in on the Q1 meeting that we had back in May and kind of gave the overview of what he was seeing personally from his CPA firm and why they're not providing audits anymore. He was keenly aware that we were going to put out a bid. So we involve our CPA once a year, and that's in our first quarter meeting. Mm-hmm. And he's going over the previous year's financial statements and kind of talking everyone through that. Intra-year, myself and the executive director meet with formally the finance committee each quarter. And we just did that a few weeks ago and presented our findings through the RFP process. And then they in turn will make a formal recommendation to the broader board in an upcoming meeting.
Right. Yeah. It's so important that in fact that relationship is between the audit firm and the board, in fact.
Yeah.
It's good to hear that that's what's going on. And any feedback from you, Melody, on the having a separate audit committee, or if there be a certain committee of the board that communicates? I know sometimes it's a question simply of the number of, the board size where you're able to have that committee structure.
It's a balance, because what I find is if you have too many committees, that it's harder to recruit board members, where if you have engaged members, they often can do more than having more people per se. So you got to find that right balance for your organization. You do want somebody, though, either executive or finance committee or a separate audit committee to help with that decision making. And it's a requirement of the audit to have that governance communication.
Thank you. Well, thanks so much for all your questions. Sorry we couldn't get to all of them, but please hop over to the forums and we'll keep the conversation going. I'll put that link in the chat and I will pass it on to Ruth to wrap up.
Thank you. I actually want to go back to what you were talking about and just say, this is a period, just to go into, kind of organizational dynamic speak. It's a period of a lot of disruption in this field. And during periods of disruption, you have a chance of innovating and changing things. If the external environment, in terms of being able to provide audits as they have always been provided, changes, we have to also figure out how do we fit in that in a reasonable way. What can we do to maybe to prepare better for the audits, to ensure that there are auditors available through different means than the usual? How do we manage this? And so there's a lot to be done in this whole area. I think that we need to talk about together. How do we talk to state the state charity offices about their requirements for thresholds? How do we negotiate so you don't have to negotiate individually with them and with funders around those audit requirements and what they really want to see from us? So the takeaways I have here are what we've already talked about, but I do want to say that it's going to be important for us as a nonprofit financial commons to follow up on this issue. Quite frankly, I was pretty shocked at the amount of pain around this and the amount of difficulty that people have had in scheduling audits, and especially audits that are in any way cost effective. People have described everything from going from $10,000 cost point to a $40,000 cost point, and then having trouble scheduling them in a timely way. That's unreasonable for people in nonprofits to have to deal with on a regular basis, and it all obviously requires a larger systems approach, and we commit to being a part of that and to trying to make that happen. Somebody's just put in the chat $45,000 in the Boston area. Believe me, I know. And how are you fitting that into a budget when you've scheduled in 10 or 12? I want to say before I go on and move out of this particular webinar that NFC is itself a nonprofit. We could really use your support financially, and we will put in the chat the place where you can give us a donation. As much as you can afford, the value that you think you get out of our content is what you should give us. We will later on be thinking more about a membership model. But if you need for there to be a place where you can share on these kinds of issues and learn kind of what is it that is going on more generally in the field, and you appreciate that, please donate today. And with that, I want to ask people to be sure to kind of keep in touch with us about this issue, because we will be doing some follow-up organizing work that takes into account where we need to see changes. Believe me, we don't think it's all on the individual nonprofit to manage this. So thank you very much for coming, and please stay connected on this one. Thank you. Bye.